Ladies and gentlemen, good day and welcome to the Neogen Chemicals Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Solanki from CDR India. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and welcome to Neogen Chemicals Q1 FY25 earnings conference call for analysts and investors. Today, we are joined by senior members of the management team, including Dr. Harin Kanani, Managing Director, and Mr. Ketan Vyas, Chief Financial Officer. We will commence the call with opening thoughts from the management team, post which we shall open the forum for Q&A, where the management will be addressing queries of the participants. Before we commence, I would like to share our standard disclaimer. Certain statements made or discussed on the conference call today may be forward-looking in nature. The actual results could vary from these forward-looking statements. A detailed disclaimer in this regard is available in Neogen Chemicals Q1 FY25 earnings presentation, which has been uploaded on stock exchange websites. I would now like to invite Dr. Kanani to share his perspectives. Thank you, and over to you, sir.
Thank you for joining us on our first quarter earnings call for FY25. As always, I begin by sharing my views on the performance and strategy, while Mr. Ketan Vyas, CFO, will take you through the financial highlights. Neogen Chemicals has demonstrated a strong start to the new year with healthy improvement in both top line and profitability matrices. Despite easing pressure, the business landscape was still marked by challenges including low China demand and price, economic uncertainties, and supply chain disruptions. In response to weak global agrochemical markets, we strategically shifted our focus to non-agrochemical applications, which offered more stable demand. We overcame severe logistic hurdles through robust supply chain management, solidifying customer ties. Both Bulichem and Neogen Ionics have made positive contributions to the consolidated performance. Let me quickly summarize the key financials for Q1 FY25. Our consolidated revenue stood at rupees 180 crore, higher by 9% year-on-year, while EBITDA came in at rupees 31 crore, an increase of 10%, translating to EBITDA margin of 17.1%. Profit after tax stood at 11.5 crore, representing an increase of 18%. Mr. Ketan Vyas will share more insights on the financial performance. Turning your attention to our segmental performance, in Q1 FY25, organic revenue stood a growth of 17%, while inorganic revenues declined by 14%. Both bromine and lithium raw material prices significantly declined during the period. Adjusting for this fall in bromine prices, the organic revenues would have been higher by rupees 14 crores in Q1 FY25. Likewise, inorganic revenues would have been higher by rupees 27 crores if not for the steep fall in lithium prices. Moving on to our expansion initiatives, the initial capacities of both lithium electrolyte salts and electrolyte is up and running. Out of 400 metric tons per annum capacity of electrolyte salts and additives, we have commissioned 200 metric tons per annum and started shipping commercial quantities to international customers based on approvals received. Out of 2,000 metric ton electrolyte plant, 200 metric ton per annum has been commissioned and trial quantities have been dispatched to 3 customers. Their approval is underway. Customer feedback pertaining to product quality and efficiency has been favorable so far. As a result, we are hosting many domestic and international clients to our facility for product inspection and approval processes. These capacities will cater to the immediate needs of customers and also provide valuable market insights. With respect to our greenfield battery chemicals facility using MUIS technology, I am glad to share that we have achieved financial closure for bulk of the capex with favorable terms. Construction work has already commenced and will remain on track to strategically commission this facility in FY26, aligning with upcoming battery capacities in India. We anticipate 2 major battery manufacturers starting productions this year and are engaging in long-term electrolyte supply contract discussions. Our strategic hiring in battery chemicals is nearly complete, and close to 70-80 employees are focused on the project execution alongside ongoing phase one production. We continue to see strong demand for non-Chinese supply of lithium salts and electrolytes from de-risking standpoint and have and accordingly initiated discussions through MOUs, pricing commitments with international customers. In a boost to Indian battery manufacturers, custom duties on critical minerals such as lithium has been exempted. This is exempted to reduce production costs of batteries and consequently the overall price of electrical vehicles, and will also make Neogen electrolyte more competitive. We remain positive on electrolyte opportunities in India. As one of the first Indian companies to supply commercially produced, meeting global standard electrolyte, we are pleased to contribute to India's vision of becoming a self-sufficient lithium-ion battery manufacturing hub. Our future growth strategy centers are scaling up organic and inorganic chemical operations with high emphasis on CSM and advanced intermediates. Our R&D focus on innovation coupled with strategic push into battery chemicals will be instrumental in achieving this. Neogen also forayed into semiconductor material supply chain during last quarter, developing some specialty gas products as well as liquid products required for semiconductor applications. While navigating present macroeconomic challenges, we remain optimistic about the Indian chemical industry's long-term exponential growth prospect. We intend to harness this potential to create enduring value for our stakeholders. That concludes my opening remarks. I would now request our CFO, Mr. Ketan Vyas, to share financial highlights for the period under review.
Thank you, Dr. Hari. Good evening, everyone, and welcome to the Q1 FY25 earnings call. I will take you to the key financial highlights. Please note that these are on consolidated basis and based on year-on-year comparison. In Q1 FY25, revenues increased by 9% to rupees 180 crore. Despite challenging operating conditions, this growth was volume-driven, primarily due to higher contribution from non-agrochemical products amid weak pricing. Organic chemicals saw 17% revenue growth, reaching rupees 142 crore, while inorganic chemicals experienced a 14% decline in revenue, totaling to rupees 38 crore. As explained by Dr. Hari, the revenues would have been higher, but for the decline in prices of both bromine and lithium raw materials, the revenue mix between domestic and export was 73% and 27% respectively. EBITDA rose by 10% to rupees 30.8 crore. The increase occurred despite higher employee costs and other expenses, aligning with capacity expansion initiatives at Neogen Ionics. Margins were maintained at 17.1%, supported by operational efficiency, even though there was continued pricing pressure across key products. Profit after tax came in at rupees 11.5 crore, an 18% increase. This strong operational performance was further enhanced by lower tax rate. Depreciation and interest expenses are expected to rise due to accelerated capital expenditure in battery chemicals. That concludes my initial remarks. I will now request the moderator to open the forum for Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Abhijit Akella from Kotak Securities. Please go ahead.
Yeah, good afternoon and thank you so much for taking my questions. Dr. Harin, to start with a couple on the battery chemicals business. One is, what's our line of sight into the new battery capacities coming up in India over the next 12 to 18 months? So far we've heard maybe announcements from maybe 3 major battery makers, Ola, Exide and Amara Raja, but haven't heard much from the others yet, at least as far as I'm aware. So how do you see the capacity coming up in India, and will you sort of have the confidence that we'll be able to sell out our 30,000 tons by the scheduled timeline of, say, 2H FY26, or, could there be a need to maybe delay it a little bit to match with the customers' plans?
Thanks for the question. So as you mentioned, for the electrolyte, you have already three battery manufacturers like Ola, Exide, and Amar Raja. And as you mentioned, they are likely to start in the current year and next financial year. On top of that, there was also Reliance, which is expected to start in the next financial year, and also there will be Lucas TVS a little bit later down the line. From the point of view of achieving 30 KTA full utilization level, the main target was FY28. So by FY28, we also expect that there will be JSW as well as Tata, who have also announced their intention to both get into battery manufacturing. Both of this, at least one of them or both would have started. And we also expect some smaller battery manufacturers who are making for electronic application as well as, home usage and some niche applications, who also are planning to set up their shops. Even these would start, some of them would start in the current financial year, and some would start by, let's say, by 2025-26 calendar years. So we feel confident that our target to reach by FY28 or 29 full utilization level, that continues to remain, and we are on track to do that. I still feel that our target that we will need more than 2,000 metric ton capacity in FY26. So by second half of FY26, we would need, let's say, at least 5 giga or 10 giga kind of electrolyte support. That is my expectation. So we would, at least for now, what it looks like, we would be on track to bring the electrolyte capacities online in the second half of the financial year, in the second half of next year's FY26. So that would be still on track, and we don't see any reason to delay it so far.
Got it. No, that's great. And then on the pricing front, China electrolyte prices are somewhere in the ballpark of $3 a kilo, I believe, at present. So how do we sort of negotiate the pricing with our customers? What sort of discussion do we have around the construct there?
So, I would not like to discuss specific numbers, because when you go to China also, there are range of electrolyte prices depending on the quality and the formulation that you are actually looking at. The second point is those price, the China price would be in China. So you would also need to consider and factoring whether those electrolytes can be brought to India. And when they come to India, what would be the final delivered landed prices of these. And in some cases, it's almost like, just from a logistic point of view, it's very complicated, especially when your volume becomes like, thousands of metric ton. It becomes very complicated to just manage the logistics. So just from the criticality point of view, also, you would have to basically make sure that the electrolyte would have to be supplied from India. So I think when we are discussing with our customers, even our customers know that, prices in China will fluctuate. They are more keen to understand that, after accounting for all the raw material fluctuation, the contribution which Neogen is bringing in, what is that, and is that competitive across what they see internationally? And so far, the answer to that has been yes. We've also done many simulations for our customers, wherein, the Chinese price also goes through crazy low and crazy high. So overall, when they look at like a 3-year, 4-year kind of point of view, having a more stable formula-driven price is much better than, just spot buying of something as critical as an electrolyte. And most of the customers have also acknowledged that, and they've seen that, and that is basically driving the discussions.
Thanks. That's really helpful. Just one last thing from my side before I get back in the queue. With regard to the salt sales into the international markets,
Yeah.
any sort of, feelers from your global customers regarding, whether there would be any change in their plans in the event of a Trump presidency? Could there be some changes to the Inflation Reduction Act or, just some changes to the battery demand outlook or something like that if a Trump administration came to power?
As far as the talks I am having with the customers, at least most of the customers are looking at Neogen, of course, as a IRA fulfilling act, but they are also looking as, decoupling from China and having an alternate to China. So, some of the agreements which we've signed with this customer, while the volumes are not committed, but the prices, again, formula-driven prices, using the same rationale that we've seen earlier, and even though they are currently much higher as compared to China, but they understand that, India has its own dynamics, and outside China, they still see Neogen as one of the cheapest source. So they are more focused in that Neogen being the cheapest source outside China, they would like to engage and at least buy certain amount of their quantities from them. So we've not seen them, reduce the numbers or the demands that we were talking of. We still see them interested to buy from Neogen as a alternate. So I think the initial capacity which Neogen is setting up of 5,500 metric tons of electrolyte, and even in the beginning, part of it be internally consumed. The question is not whether that capacity can get filled. The question is how fast we would have to increase depending on what percentage of volume we will get in the international market. Because, as we've shown in our presentation also, the demand in the international for the salt is very high. So if we can maintain our position to be the cheapest source outside China, and more and more customers sees value in having Neogen as a completely China-free supply chain, IRA compliant, and in absence of even IRA, basically as a backup source for their supply chain surety. How many customers see the value and how fast we would have to add more capacity beyond what we are currently planning is the question. But again, the first capacity has to come online. We need to give confidence to our customers that we can make at large scale the quality and at the cost which we are currently estimating. And then, the discussions can go forward from there.
Perfect. Thank you so much, and I'll come back in the queue for more.
Okay. Thank you.
Thank you. The next question is from the line of Jason Soans from IDBI Capital. Please go ahead.
Yeah, sir. Thanks for taking my question. So, basically, I know you have given some plans, in terms of the funding for the battery chemicals business. But just now, so that the funding, you've got the closure, just wanted to understand, I believe we had 1150 crores debt funding plan for the whole capex of the battery chemicals. So just wanted more finer details on that. What could be I believe the EMI will start hitting from FY27 after the moratorium ends. So just some more funding. I also believe that you've got around a 9 billion term loan from SBI as well. So some finer details on that would be helpful.
Yeah. So basically, we have, we received from SBI for especially our Pakhajan and the Greenfield site, where, the Greenfield site, we already received the funding for that. And again, it has a 2-year moratorium and it has a 10-year repayment. The 10-year repayment, in that also 2-year first, no interest, no premium, no installment. Then after that 1 year, only interest payment. And then after year 3, you start paying the installment back. And that too, it is graduated. So in the sense that it's not like 10% every year. In the beginning years, it would be around 4-5%, and then some of it will be back-ended. So it will be kind of ballooning. So I think the repayment would start, around the time where the electrolyte and salt plant would be close to running at full capacity. And again, till the time the project completes, there is a complete moratorium on all interest payments, etc. Similarly, we have tied up with also one more banker, one more of our existing banker, which has also for our expansion activities ongoing in Dahej, where also we have a 10-year kind of a period, where the first year is like a moratorium because that facility will start producing faster. And then similar terms as SBI, where, you start paying installment after another year, and then the interest, some of the installments are also back-ended and not uniform.
Sure, sir. So basically what I understand is there's a SBI term loan of around 9 billion and the other one should be of 2.5 billion. Is that right? The understanding is right?
So out of that 2.5, we already secured around 100, so around 1 billion, another 1.5 billion is under discussion.
Okay. So two loans of 9 billion and 2.5 billion are there, right? Right. Okay.
9 and 1. 9 and 1. So 10 is there, 1.5 is under final set of discussions.
Which 1.5 billion is under final set of. Okay. Sure, sir. Okay. And so just wanted to understand also from, of course, battery chemicals is a very crucial engine of growth for us. Now, I just wanted to know, along with the discussions, whatever the initial discussions we are having, how far do you think we are from signing a concrete long-term contract with these battery manufacturers, which will probably secure volumes from us, secure a lot of volumes for us in the electrolytes business. So how far do you think we are from that point?
So, as we discussed earlier, there are 2 or 3 customers who would be basically needing electrolyte, let's say in this and next financial year. At least I'm talking of the larger giga scale. As Mr. Abhijit mentioned, Ola, Exide and Amar Raja. All of them have a commitment that they want to localize. We have been engaging with them strongly, especially, in case of Ola, they also mentioned us in one of the news release, and we had also worked with them for last many years, developing different recipes, to develop various recipes with them. So we worked very closely with them. So of course, so we are still awaiting. So, any giga scale production will go through first, small 1,000 cell, then 10,000 cell trial, then maybe one trial run in the giga plant. And then based on the outcome of that, we can start discussing long-term contracts. So we are hoping that in the current and the next financial year, so in next 18 months, we should be able to convince let's say 2 out of 3 or 3 out of 3 customers to basically sign up with Neogen and get into long-term agreement for electrolytes.
Sure, sir. Thanks for that. And so just wanted to understand that, you recently have incorporated a subsidiary in Japan.
Yes.
Just wanted to know what is the rationale behind that? What are you looking at, from that subsidiary?
So, mainly, so we are very fortunate that we are able to hire a very senior level person, who has many years of experience leading a Japanese agrochemical company in Japan as well as in India. So he's helping us with all our strategy and our business development activities. So we felt with the number of interactions which we are having in Japan for battery materials, then also for our CSM business and some other initiatives like, related to N-butyl lithium, some semiconductor related projects. So we felt we needed a dedicated Japan team. So the main role is to basically develop under the leadership of the senior person, Japan team, which can then work more closely with the customer, where, so for example, before some very senior level meetings would happen once in 3 months or once in 5 months when either me or Mr. Surana is visiting Japan. Now, follow-up visits can be done by our Japan team almost on a monthly basis. So some of the things which would take 6 months, 9 months would now get happen in 3 months, 6 months. And also the customers feel more confident having the Japan presence. So this is the main role of the Japan subsidiary.
Okay, sure, sir. And sir, in terms of, we are recently hearing, volume sales in EVs, there's a slowdown happening. Probably sales for hybrids plug-in hybrids also probably are on the growth path. People are looking at any, charging infrastructure to be an issue, range anxiety, all these things are there. So just wanted to know from your perspective, how are you looking at it? If there is some delay in these capacities coming online. So, just could you throw some color, your perspective on this?
From basically whatever discussions I've had so far, we have to look at it in two ways. One is the international business for salt and the local business for electrolyte in India. So when I'm thinking of the electrolyte salt business in the international market, what I'm seeing is there already exists a market which is far bigger than the capacity that we are putting for our salt. So it's just a question of proving ourselves, proving that we are the best backup to China that they can have. And then depending on that, what's that market share which you can get. IRA is one of the driving factors, but in addition to IRA, just having a backup to China, which is having lesser difference or the lowest difference as compared to China, is also of interest. So I think when I'm thinking of the international business, the existing capacity with which what we are starting is just to prove that we can make the salts at scale at commercially competitive prices which are attractive to the customers. And then depending on, how fast the EV market will develop, how much percentage of market share we can get in the international market will decide, whether how fast this 3,000 becomes, like how fast we grow beyond the existing 5,500 metric ton per annum capacity. So when I'm thinking of that, I'm thinking like the factors which you mentioned, like range anxiety, plug-in hybrid versus pure EV. I mean, these are things which will play out and that will determine how fast we will grow beyond the initial, let's say 5,500 metric ton salt capacity which we are installing. Now, when you think of India market, I personally feel that in India, the energy storage, especially for renewable, is also a very good opportunity. So, of course, EV is there and we are seeing that two-wheelers and three-wheelers, there's very large and very fast penetration. That continues and we still are at a very low, low contribution to the overall sales. So I think in two-wheelers, we are around 4-5% and in four-wheelers, we are at only about 2%. So I feel as more and more products come to the market, more and more customized products will come. I feel there is still a lot of room for just the EVs to grow. And on top of that, we have the energy storage demand. We have seen government also become more proactive, giving, the grid level energy storage projects. They used to be around 100 megawatt hour. Then they have asked for bidding of 500 mega. And now there are some giga level bids also which are happening. So more and more renewable solar energy will also require this battery storage. So we'll have to again watch that, okay, depending on how well EV is accepted, will we be 150,000 metric ton kind of a electrolyte demand in 2030? Will it be 120 or will it be 250? I mean, the jury is still out on that and I think, we'll have some idea on that in 1 year or 2 years time. But again, for me, this is more a question of beyond FY28, right? What is the demand which we are looking at and how soon we need to increase capacity depending on how this plays out.
Sure, sir. And just lastly from my side, just wanted to know, sir, broad revenue numbers, revenue EBITDA PAT for BuLi if you can give for FY24 and what is the outlook on that, going ahead?
So, BuLi has mostly one product. So for confidentiality reason, I don't want to give exact EBITDA numbers there, but I would like to say that, our BuLi business has stabilized. In fact, Q1 was better as compared to before. And in Q2 also, we are seeing a very good order book where we feel we will be fully utilizing its full capacity. We also got in principle environmental clearance. So as we see 1 or 2 quarters more, with a very limited CapEx, we have an ability to